something major is happening to the US dollar and most people are not paying attention. But the macro message is clear. The dollar is currently testing a key trend line that's held for over 14 years. And if this turns into a full-blown breakdown, then we may be at the start of a monumental shift in the global financial order. This would have big implications for your portfolio, not just your crypto, but your stocks, your commodities, all that kind of stuff. So let's go through what is playing out here and what you need to do and to know, okay? We can start by zooming out to get a handle on the power of the dollar. This is important because the US dollar isn't just America's money, it's the world's money, the global reserve currency, making it the unit of account which everything gets measured globally, from commodities to crypto. And because of that, the dollar exercises a kind of inverse gravity. When it rises, everything else gets punished. And so the dollar, when it falls, well, the opposite is true. The weight lifts and assets like Bitcoin, gold, tech stocks start raging. That's why the DXY, the dollar index, matters so much, as it tracks the value of the dollar against a basket of other currencies. And right now, if you look at the DXY chart, you can see that a multi-year trend line that has been in place since 2011 is currently being tapped. And it looks like the DXY might be in the process of breaking to the downside. That would see the dollar exit that prolonged upward channel, and it would be a major technical break as the dollar moves in very long cycles. And it could start a major downward cycle, a long downward cycle for the dollar. So if we're potentially at the start of a new macro regime, let's think about the crypto connection. And actually, history shows it's not super complex. In short, the biggest Bitcoin rallies have happened when the dollar is weakening, and there is an inverse correlation between the DXY index and the price of BTC, something you can see very clearly on this chart. And you can pick out the key moments in Bitcoin's history too. Back in 2017, the dollar topped out and rolled over, and at the same time, Bitcoin went straight up from under $1,000 to nearly $20,000 in less than a year. Then there's the 2020 to 2021 bull run. That was when COVID sent the world crazy and the markets were flooded with insane amounts of liquidity. Well, everyone was sitting at home in front of the screens. And on the chart, you can see how the dollar briefly spiked and then started falling hard. What happened to crypto? Bitcoin surged from $4,000 to $69,000. Ethereum ripped from basically nothing up to almost $5,000. The entire ecosystem exploded. We had wild risk-taking behavior, NFTs, pictures of apes were going for $1 million a piece. People were trading JPEGs of rock pictures, man, for like millions of dollars. So crazy times. A large part of that mania was because a weaker dollar meant much, much looser financial conditions and expansion of liquidity in the exact kind of environment where massive risk-taking thrives, where crypto thrives. And conversely, you can see what happens at the end of 2021 and through 2022. The DXY surges back up while BTC crashes and spends the year in a grinding bear market. But of course, it's not only crypto that is tied with the DXY, as when the dollar is weak, you can also get major pumps in stocks and in commodities. And again, we saw this very thing playing out in 2021. We had crazy, crazy stuff like GameStop, the GME stock went crazy, thanks to a historic short squeeze alongside meme coins like Doge and Shiba Inu making millionaires overnight. Although it's growth and tech stocks that especially tend to outperform when the dollar weakens, with the tech-heavy NASDAQ 100 following the same bull-bear pattern as BTC through 2020, 2021, and 2022. By the way, guys, if you want to trade crypto coins, Bitcoin, Ethereum, Solana, all the top coins, all the altcoins, the dog coins, whatever you guys want to trade, you got to get yourselves an account over on BitUnix. The question to ask yourselves, will you start taking your trading seriously and go to an exchange that respects your privacy? Will you start taking your trading seriously and go to an exchange that's got deep liquidity in the coins that you want to trade? And there's never been a better time to sign up, because right now they have insane sign-up bonuses. You'll get, right down here is a link, by the way, right here under me. There's a link there, and you'll get a 30% discount on your trading fees. You'll get a $400 deposit bonus when depositing $2,000 or more. You will also get insane trading bonuses. Basically, the more you trade, the more money goes back in your pocket, and we're giving away $1,000 in every live stream. And to be in to win that $1,000, you got to be signed up. Link down below. Okay, now back to this, guys. For gold, for example, is priced in US dollars. So if the dollar falls relative to other currencies and effectively gold becomes discounted in those other currencies, while also acting as a place to park capital when fiat currencies weaken, which is why gold's been hitting to all-time highs. Similarly, a soft dollar makes oil and industrial metals more attractive too, since they're priced in USD. And this is not happening by mistake, by the way. Trump said he wanted a weaker dollar. He's got a weaker dollar. Take a look at gold right now. It's reacting exactly as we should expect it to when the dollar is rolling over, all of which is why a long-term breakdown in the DXY is so important. This is potentially a major shift. If we're seeing the early stages of a bear cycle for the dollar, then there's a potential mega shift in capital flows with big implications for how wealth gets stored and built over the next 5 to 10 years. So let's check the key charts going back to that long upward channel the DXY has been ranging in for years. You can see that besides the dollar tapping the lower support level, the MACD also looks bearish, supporting the case for a break lower. Then there's this chart from Cryptolica showing the BTC DXY cycle. According to this reading, BTC has higher to go before the cycle top, which we're very much in the camp that Bitcoin's going to 200K plus this cycle. Well, the DXY has a lot of room to drop lower. And for historical perspective, it's worth rewinding all the way back to 2002. And you can see that the DXY started a long-term drop at that time. And of course, that was pre-Bitcoin. And in response to the dollar weakening, gold put in a 6x rally over the following decade. And yes, gold ETFs definitely were helped to be part of that equation, but still, money flowed in. Right now, as mentioned, we're seeing gold hit new all-time highs, but this time around, we have BTC in the picture too, being pushed as digital gold by Larry Fink and BlackRock and the world's most powerful institutions. And if we look at the BTC and gold side by side, they're both moving up and to the right this year, but gold has been flying over the past few weeks while BTC's chopped, suggesting that it might be soon time for BTC to play catch up, especially if gold takes a breather. And the correlation has been that gold has been moving first, Bitcoin following a few weeks later, meaning we're probably due for a move relatively soon. Overall, then, the DXY is a big deal and has major impact on the markets, and actually, that's great because it provides such clear signal for us about risk on, risk off attitudes. You can take a look at where the dollar is going and then position yourself accordingly with crypto, gold, and risk on assets like tech stocks, all set to benefit if the DXY keeps breaking down. And the charts are showing that likely a major breakdown will be confirmed and continue as rates continue to get cut, financial conditions continue to be loose. Thanks for watching.